when you see companies going public like that and you see either retail investors, and I think it's retail investors maybe who are embracing these, what is your thinking of how they need to change their thinking? Which Beth kept saying, like, hey, you gotta maybe develop a different skill set. What do you think that skill set is? And should they even be touching those?
I wouldn't say you shouldn't be touching them. I think for me, what I do is, I've been in the public markets and equities since 2007. So that's what I know. That's what that's the skill set I bring to the table. And there were some strong winners for a time being in the SPAC market, still are some good names. So to ignore that completely, I think could fall in the trap that I see a lot of people do in finance is they'll look at valuations and they'll say, this is insane. It makes no sense. I'm staying away. And they miss out on one of the most epic bull markets. Arguably in history. And so SPACs being a part of that, I think the main thing I would say is you have to investing in something with very little price data to analyze. And that is an untested product in the public markets is you have to have some kind of risk management plan. You have to have some kind of exit strategy when doing something like that. I mean, that's how we approach the SPAC market is, we found some stories that we liked. We played some momentum, some price setups that we liked, and we had an exit strategy. And when it got triggered, we stepped away.
Oh, interesting. So give me an example, either one of you, of like an interesting SPAC story that you embraced and either stuck with or just decided, wow, this is getting overvalued, and decided to just take that win.
I can give you the one that we liked that we are, the IO fund is still invested in. It's called STEM. It's batteries, but it's also software that optimizes how the battery is used, because the statistics are about 40% of solar energy or whatever it might be, renewable energy is wasted because of the lack of optimization. When should you be on a generator? When should you be relying on the battery? So it's called Athena software. And the reason why we liked STEM is that they had already met their full year revenue guidance and they had no debt. So that combination puts them in a little bit of a different category than one that might turn around and raise really quickly, dilute shareholders, and or is projecting some number that they cannot meet. And then
That's
we also
really interesting. Just to ask a follow up there. That stock traded, I guess, like all SPACs at $10 while they were looking for it, then popped up as high as it looks like, $50 a share. And then now it's trading at 23. So you doubled your money if you bought into that story early, but it's one you want to stick with. And if I read into it, they have a product that they have customers for and they're paying for it. So you've checked a couple of boxes there. A paying customer and a real product are two of them. Am I correct?
Yeah, that's always helpful. Yes.
I mean, I say that and it sounds so stupid when I say it, but then you look at Nikola as the opposite. And I don't know if you were involved in that train wreck.
No.
Okay, great. Because I had that dip on the pod. And when he explained the product to me, there were so many red flags going off for me as a private market investor. Because he's like, well, we're going after these like hydrogen stuff and I can do it 10 times cheaper. I said, how do you do it 10 times cheaper? And he couldn't answer the question. And then he said, well, I'm also going to do electric and do a Badger thing. And I just thought to myself, wow, I watched Elon and other people suffer just pursuing one electrical new energy model. He's going to, this person's going to pursue two simultaneously, and it's worth 40 billion now. And they don't have a car on the road. So this is a really important lesson for people. No customers, no product, no revenue is a really different class of business, is it not?
Yes, I would even extend that to say Lucid Motors, which I think one day could be a quality company. But today, as a stock investor, there's not much I can do with that company because they haven't put cars on the road. I mean,
it is very hard to get the first car on the road. I mean,
right.
Car industries.
Go ahead.
I mean, it's a tough business model. Just auto companies. I mean, historically have been some of the worst. Aside from Tesla, obviously, but some of the worst industries to invest in. So once you get past the high growth tech story, you then have to deal with the auto industry nightmare. I don't know any other way to put it from just a financial standpoint.
Literally, the worst companies we look at as private market investors that we get the most concerned about. Anybody going into healthcare, higher education, cars. You're just like, and the music industry, because it's a combination of incumbents and regulation just how in some cases dogged it is, and cars fall into that. This is a company that has a market cap of $32 billion today at $20 a share. And it was as high as $64 a share. So if I'm correct doing my math here, I'm no genius. It was a close to $100 billion company. What do you attribute that kind of insanity to at this moment in time?
Yeah. Actually, Knox is a great person to ask because his talent is that he tracks sentiment in the markets, and so he's actually the perfect person for that.
Yeah. So I think one of the most interesting hurdles we've had to address, and I'll tie this into your question, was how this market is not like 1999. I think 1999, is still earmarked in a lot of people's minds. And so people will look at these valuations and they'll look at the growth and they'll say, oh, this is a bubble. And so what followed that bubble was just a terrifying, awful multi-year bear market, And so
you lived through that? I'm not sure how old you are, but
I lived through that. I wasn't investing during that. Yeah. I got licensed in 2007. So I got to start out basically in, a multi-year bear market that was absolutely horrifying, and that was 12 years ago. And so many investors today think that a bear market was what happened last year. Just write it out. No big deal, and they're very big deals. They're awful deals to go through. So my point being is that you had this bubble. It didn't make sense. It was irrational. It was momentum driven. It was human psychology followed by a bear market. And think of all the bubbles that we've seen in the last few years. I can round off. We just saw a bubble in lumber, for example, that popped. And so bubbles don't mean bear markets.
Got it.
It definitely means there's an excess of liquidity. And it definitely means that there's an exuberance in the market. But what leads to bear markets and recessions typically is central bank policy, which is incredibly loose right now. They have backed themselves into a corner. And they just told us a few weeks ago that they're going to let the party go on a little bit longer.
Every startup founder and marketer needs high quality leads. Well, with 30 million companies on LinkedIn, they can help you take your startup's growth to the next level. We've used LinkedIn marketing before here at This Week in Startups and launch our investment firms. It's really an amazing platform, as you know, because you've been using it for over a decade. LinkedIn offers seamless tools for lead generation and brand building. First, you might want people to just become aware of your brand. Maybe you want them to read a blog post or follow your company on LinkedIn. That's great for building your brand, but you may at some point want that lead gen. And you may want to get their email and set up a demo of your software product or your marketplace. You understand the difference between these things. You're sophisticated. And you can target and reach people down to their job titles, the company name and location, engaging customers by account, allowing you to build relationships with your most important acquisition targets, where they live and where they're ready to do business. And that's LinkedIn. So LinkedIn's advertising capabilities will allow you to acquire those new customers and to grow existing accounts so that your business is set up to maximize its potential. Here is an amazing offer from our friends at LinkedIn. They're offering $100 in advertising credits so that you can get started today. Learn how to connect with customers on LinkedIn's dime. Visit linkedin.com/thisweekinstartups. And you got to spell this all out with no spaces and no dashes. LinkedIn.com/thisweekinstartups to claim your credit. Terms and conditions do apply because they're giving you $100.